Welcome back to the Blockkoin Academy. Today we'll be doing lesson 3 of the journey. So lesson 3 will just be support, resistance and market structure. So like I said, it will just be support, resistance and market structure. In lesson 2 we covered position sizing as well as risk per trade. So today will just be the basic market structure, supply and demand, in other words support and resistance. This lesson will also be broken down into 5 simple steps, just so that you guys can understand how price actually moves and how to identify key levels. So today we'll just be looking at the Bitcoin 1 hour time frame. It's just better to look for those key levels on this time frame. I'll just move this chart to the side. So step 1, which is to identify support. So what is support? Support is a price area where buyers previously stepped in and pushed price higher. It is where demand was strong enough to stop price from falling further. So if we look at this chart over here, I'm just going to zoom out for you guys. So I'm just going to throw out the support areas. So support areas you typically find at swing lows. You can see there. Swing lows, or otherwise called extreme lows. So it's just the lowest low of the chart. So these two areas, for example, will be identified as your support levels, as well as this major support level over here. So those are your 3 support levels. Support is not a single exact number, but it is an area where buyers showed interest, meaning when price was pushing down, buyers were pushing and showing interest, which pushed price up. Step 2 is identifying resistance, which is basically just the inverse of support. Resistance, in other words, is a price area where sellers previously stepped in and pushed price lower. So where will we find resistance levels? We'll find resistance levels just like our support is at major lows. You'll find resistance at major highs. I'll just use a different color for the resistance levels. So just looking at this part of the chart, these are your 2 resistance levels. If you go up, you'll have another one over here. I wouldn't necessarily count this one, but you would have another one over here. So you basically find your resistance at swing highs and you find your support at swing lows. Always remember, support is demand, resistance is supply. Those are the 2 terms that is commonly used. If they aren't saying support or resistance, they would say demand or supply. Step 3 is understanding market structure. So price moves in 3 different ways, in 3 different patterns, and that is, I can just show you over here. So firstly, we have a bullish pattern, which is a low, or a high, I should say, a higher high, a higher low, a higher high, higher low, higher high, higher low, and so on and so forth. Just close that there. Then we have bullish structure and bullish market structure, which is a high, lower low, lower high, lower low, lower high, and so on and so forth. And thirdly, we have our ranging market, which is basically just sideways movement, not giving us any clear direction. It's just sideways. That we'll get into probably into lesson 4, but for now let's just look at bearish and bullish market structure. So to identify, as I just showed you, what is bullish and what is bearish, we look at higher highs and lower lows, as well as lower highs and lower lows. So for bullish structure, we typically look for higher highs. You can see over here, high, higher high, higher high, higher high. At the lows, low, higher low, higher low. For bearish structure, high, lower high, lower high, lower high. For the lows, low, lower low, lower low. So that is how you identify the market structure, if it's bullish or bearish. Yeah, so structure will always tell you the direction, support and resistance will always tell you the levels. So moving on into step 4. Step 4 is breaks and reclaims. So levels matter mostly when they break. If price breaks below support and holds below it, it then becomes resistance. If price breaks above that resistance and holds above it, that level can become support. So what do I mean by that? I just move over to the, just gonna delete this. Yeah. So I'm just gonna show you guys what step 4 looks like. So as you can see over here, we have a level of support at that low over there. If I just zoom in more, price obviously clearly broke below that over here, came back up, retested it, and now this support over here is now acting as resistance, and this retest is now pushing us back down, right? So that's just what it means when I say support can flip into resistance, and the same with resistance can be flipped into support. So markets will shift when the structure shifts. Now moving on into step 5, how do we actually apply this in our trades? Not sure if you guys saw that. So moving on into step 5, how do we actually apply this into our trades? Before entering any trade, ask where is support, where is resistance, and where is current structure. You do not randomly take a trade in the middle of the chart without finding any structure. Support and resistance give structure to your trade plan. Always remember that part as well. I'll say it again. Support and resistance give structure to your trade plan. Never trade in between the charts, just in a random. Never just trade in the middle of the charts. Always look for your key support levels. So that is lesson 3. Next lesson, which will be lesson 4, we'll cover the trends versus ranges and how to approach each environment differently. Always remember, protect capital first, growth comes after. Thank you guys, that will be all for lesson number 3. I'll see you guys at lesson 4.